I'd like to take this opportunity to thank our SIEW followers, partners, sponsors, and community for joining us today for this inaugural webinar. Since we last met at SIEW in October, the global energy landscape has transformed drastically. The COVID-19 pandemic has led to unprecedented challenges for the energy industry, especially in the oil sector. According to the International Energy Agency, or IEA, transport accounts for around 60% of global oil demand. With many people worldwide in lockdown, oil demand has plummeted. Less than 2 weeks ago, and a bad memory for some of us, the West Texas Intermediate crude prices fell to a historic low of negative US $40 per barrel. In the near term, the energy sector will continue to face enormous challenges, given the uncertain outlook in manufacturing, commerce, and tourism. In Southeast Asia, oil is the largest component in the region's energy mix. Therefore, any major disruption would have serious implications for the region. However, it's not all doom and gloom. This crisis could be an opportunity for countries to accelerate their transition to a more secure and sustainable energy future. Our economies will recover, as will consumption and manufacturing activities, which will lead to increased energy demand. Despite a temporary drop in emissions, the urgent need to combat climate change remains. How can we seize new growth opportunities and work together towards a low-carbon energy future? Given this context, I'm pleased to announce the theme for SIEW 2020, Creating Our Low-Carbon Energy Future Together. Despite being an alternative energy disadvantaged country, Singapore is playing our part towards a cleaner and more sustainable energy future. As part of our energy story announced at SIEW 2019, we aim to increase solar deployment to at least 2 gigawatt peak by 2030. This will be coupled with at least 200 megawatts of energy storage systems beyond 2025 to mitigate intermittency issues. We have since achieved our 2020 solar deployment target of 350 megawatt peak in the first quarter of this year. We have also commissioned studies on emerging low carbon alternatives such as hydrogen and carbon capture, utilization, and storage. This will inform the development of long-term low carbon strategies for Singapore. We'll also work closely with companies to further develop pre-commercial and deployment-ready technologies, as well as business models for these solutions. On this note, let me share some exciting plans for SIEW 2020. Together with the IEA, we will be co-hosting the second Global Ministerial Conference on System Integration of Renewable Energy. This conference will bring together ministers and industry leaders to discuss developments and solutions to enhance energy security, sustainability, and affordability. S&P Global Platts will host a new conference on the LNG and hydrogen gas markets in Asia, with a special focus on the growth and development of hydrogen in the region. Asia Clean Energy Summit will examine clean energy alternatives, including floating photovoltaics. Asian Downstream Summit 2020 will be co-located with the Asian Refining Technology Conference, with a focus on sustainability and productivity in refining and petrochemicals. As we kickstart this year's discussions, I'd like to thank Mr. Neil Atkinson from the IEA, Mr. Cheng Guan from Sembcorp Industries, and Ms. Swee Chen from Global Compact Network Singapore for joining us today. I look forward to hearing their views on co-creating our low-carbon energy future. I hope all of you will enjoy the presentations and interactive discussions ahead. We look forward to your participation at the 13th SIEW on 26th to 30th October 2020 at the Marina Bay Sands, Singapore. Thank you.
Thank you, Mr. Ngiam, for announcing this year's SIEW theme, Creating Our Low-Carbon Energy Future Together. May I now invite Mr. Neil Atkinson, Head of Oil Industry and Markets at the International Energy Agency, to deliver his presentation. Mr. Atkinson, please.
Thank you, and good morning from Paris. Good afternoon to all of you in Singapore. Thank you once again for inviting the IEA to participate in the launch event. I've been privileged to go to Singapore 2 or 3 times in recent years to deliver a presentation in person. This year, sadly, that's not possible, but I hope in the next few minutes I can share with you the IEA's current views on where the oil market is. These views were published in the most recent edition of the IEA's Oil Market Report, which was published a couple of weeks ago. Can we have the first slide, please? As you can see, the oil prices in recent times, and the chart shows roughly a 6-month lag, have been quite volatile. We had a relatively calm period towards the end of 2019, but after the initial bump up we saw at the beginning of this year, when the Iranian-United States dispute spilled over into Iraq, gradually the impact of the COVID-19 phenomenon has started to weigh very heavily on prices. And as you can see, most spectacularly on the far right of this left-hand chart, prices actually for American crudes went into negative territory just about a week ago, reflecting the very weak oil demand, which we'll come on to in a moment, and the pressure that's being placed on available storage capacity for oil. On the right-hand side of this pair of charts, you can see the market is in what maybe for those of you not familiar with oil prices is a contango structure, where we have very, very low current short-term oil prices, higher prices further out, reflecting the fact that there are very, very severe short-term pressures of supply lagging well ahead of demand. So we have a very, very weak current price outlook. And the reason we have that is the next slide shows you what has happened recently to oil demand. And the title of the slide, in many respects, tells the story. Global oil demand is collapsing currently as containment measures spread. We estimate that today there are something like 4 billion people around the world who are living under some form of containment measure. The containment measures vary in strength in various countries around the world. But roughly 4 billion people whose lives are restricted in one way or another. And currently, we're in what we think and hope indeed is the worst part of the period, where we see global oil demand falling very dramatically. In the month that's just passed, the month of April, Black April as we call it at the IEA, global oil demand, as shown in the gray line, has fallen by very close to 30 million barrels per day, year on year. We're now into May, where there is still a very significant fall off in demand, although it's not quite as dramatic as that which we have seen in April. So at the moment, we're seeing the maximum impact of the containment measures, which have impacted most particularly on transport fuels. Next slide, please. As you can see from this chart, where we've grouped together the main transport fuels for land, sea, and air, you can see that all transport fuels have been affected. But the yellow or gold colored column that you can see on your slide relates particularly to the aviation sector. And as we will all know, the aviation sector around the world is essentially shut down. We're seeing something like 75 or 80% decline in demand for aviation fuel currently. We're also seeing, of course, significantly less demand for gasoline and for diesel. Gasoline in particular, because, of course, with so many people contained in their houses, so many people working from home, and of course, sadly, so many people who are now newly unemployed, demand for gasoline has fallen very dramatically. But however, as we move into the second half of 2020, the picture does begin to improve to some extent. But the assumption that we have made about the second half of 2020 is that containment measures will be eased. The exact pace in terms of how the measures are eased, we can't be entirely sure about. But here in France, where I live, measures are starting to be eased in the next couple of weeks or so. And that also seems to be the case in some of the key European economies, and also in the US and indeed in Asia, where you are. So in the second half of the year, we do see an improvement in the situation. But that still means that for 2020 as a whole, oil demand is likely to fall by just over 9 million barrels a day versus the 2019 level. And that means that most of the growth in oil demand that we've seen during the 2010s, that growth is to all intents and purposes eliminated. So this is a truly historic and quite extraordinary event. The one transport sector, just before I move on, which remains relatively in the doldrums as we move into the second half of the year, is aviation. We have made an assumption that although containment measures will be eased, there will still be a very slow or relatively slow return to the skies. And we are not expecting to see a big pickup in aviation demand, although for gasoline, the picture will be rather more positive. So the next slide, please, as we move on to look at the production side of the balance. Today is the 4th of May, and with effect from the 1st of May, the OPEC plus countries, that is the members of OPEC, or most of the members of OPEC, plus a group of other countries led primarily by Russia, they have agreed to cut very nearly 10 million barrels a day from their supply starting now. And that agreement is, as we said, just taken effect. And over the next week or two, we'll start to see signs using tanker tracking data that the exports in particular from these countries have fallen down. But as you can see from the left hand of the pair of charts we have here, the agreement anticipates production falling by nearly 10 million barrels a day in May and June. Those cutbacks are eased back to some extent as we move into the second half of 2020 on the assumption that I referred to a moment ago that the demand picture does start to improve. But production isn't falling only in the countries that have signed up for the OPEC Plus deal. We're also expecting to see significant cuts in the United States and Canada, Brazil to some extent, and also Norway, which announced some cutbacks towards the end of last week. We think that by the end of 2020, the countries from the outside of the OPEC Plus agreement are likely to see their production nearly 5 million barrels a day lower than it was at the end of last year. But the pace of these cutbacks remains to be seen. These are decisions that will be taken mainly by individual companies operating in those countries based on their financial and economic situations. But the result of this in the next slide is that in the month that we've just embarked on, the month of May, we think that the OPEC plus countries plus other countries from around the world will see their production fall by about 12 million barrels a day versus April, which is an incredible change. We've never seen anything quite like this in the past. So even as we speak, global supply is starting to fall back. However, as we mentioned a couple of slides back, we are seeing demand falling, of course, by very nearly 30 million barrels a day, between 25 and 30 million barrels a day. So although these production cuts are quite extraordinary, they are, of course, significantly lower than the actual cuts in demand that we're seeing around us and we're experiencing in our daily lives. Now, that raises an important issue that because supply continues to exceed demand quite considerably, there is the issue of storage capacity around the world. Where is this surplus oil production going? And we did some work on this in our most recent analysis that we published. And there is no simple answer to this because there is no one single source of data you can go to which tells you what the storage capacity is around the world. But on the basis of the work that we've done, looking at individual countries and making our own estimates, as we say in the title of the slide, storage capacity is definitely filling up. And on the assumption that the current supply surpluses that we see do actually turn out to be the case in May and June, we think that by mid-year, at some point in June, on paper at least, storage capacity is likely to fill up. But on what we should stress is that a global capacity figure is slightly misleading because, of course, the situations in individual countries varies enormously. And it's not necessarily an easy matter to move oil from one country to another to take advantage of available capacity which might exist on paper elsewhere, because there are issues related to access to pipelines, there are issues related to access to shipping capacity. But there is no doubt whatsoever that because of the supply surpluses that we see in the market currently, capacity is filling up. And as you will all have seen, and indeed as was referred to in the introduction, just over a week ago, or in fact a week ago today, we saw the price of oil in the United States fall into negative territory precisely because access to storage capacity had become an issue at Cushing in Oklahoma, which is the delivery point for the West Texas Intermediate crude futures contract. Now, the final substantive slide I want to show in this pack summarizes the market outlook. And what we have here in the yellow line and the pale blue line is the supply and demand numbers. And as you can see, the yellow line shows how dramatically oil demand has fallen off in this first part of 2020. And as a consequence of the fact that demand has fallen considerably more than as has supply, we see in the columns, particularly in the first quarter and the second quarter of 2020, an incredible implied stock build. In the first quarter that's already passed, we think the stock build was about 7 million barrels per day. And the implied stock build for the second quarter, which we're of course well into now, that is well over 17 million barrels per day. So there's an awful lot of oil surplus to requirements, and that oil will have to find a home. As new data comes in and revised data comes in, obviously the supply and demand numbers we're currently showing will change slightly one way or the other, and the final picture for stocks may be slightly different. But certainly the order of magnitude that we're showing in these numbers and in these slides is certainly not far away from what the outturn will be. However, as we said earlier on the assumption that containment measures around the world are gradually eased as we move through the later part of the current quarter and into the second half of 2020, we think that demand will begin to pick up again. And the pickup in demand in combination with the significant cuts in supply we anticipate should flip the market back into deficit. So in the second half of 2020, as you can see from the dark blue columns on this slide, we do think that stocks will start to draw again. But we can't get too excited about this because, as you can see, the implied builds in the first half of the year are absolutely enormous. And indeed, even before we reached 2020 and the COVID-19 crisis, we saw in 2019 builds in oil stocks, which at that time we thought were fairly considerable, and by normal standards they are. But of course, we've seen these enormous implied builds in the first part of 2020. So even as we move into a more positive outlook in the second half of 2020 and stocks do begin to fall, they'll be falling from a very great height indeed. So the outlook for 2020 overall is for a fall in demand of 9 million barrels a day, just over 9 million barrels a day, which is a record high. We've never seen anything quite like this, which of course has huge implications for the oil industry and the wider energy industry as we move through the next few years. So that's the picture we have for the oil market in the short term. The final slide I wanted to show you today is, if you like, an advertorial for the Singapore International Energy Week at the end of the year. The next slide, please. And as was referred to in the introduction, the IEA will be participating in Singapore International Energy Week at the end of October. And the 2020 IEA Systems Integration Renewable Ministerial is going to be hosted jointly by my IEA colleagues and the Energy Market Authority in Singapore at the end of October. And the topics that are going to be covered in the meeting will include the investment outlook, which will be very, very important based on the experience that we're seeing in 2020 and the changes that are going to be made. The IEA is shortly to publish its World Energy Investment Report for 2020, which contains an early look at what we think the implications for investment are going to be. And of course, it's a very high-level event. And as we show in the slide, ministers and policymakers and leading executives, CEOs, will be talking about their experiences and highlighting the most important developments and the solutions that will help renewable energy integration in power systems around the world. And the final point on this is that the IEA will be launching its 2020 electricity supply report at the conference, and this is one of the most important reports that the agency publishes during the year. So that will complement the work of the Singapore International Energy Week. I'll end at that point and look forward to answering any questions you might have later in the proceedings. Thank you very much.
Thank you, Mr. Atkinson. May I now invite Mr. Cheng Guan, Head of Renewables and Environment with Sembcorp Industries, to give his presentation. Mr. Tan, please.
Thank you, Desiree, and to EMA for inviting me to speak in SIEW's 2020 Global Launch. A good day to all who are participating in today's webinar with the theme, Creating Low Carbon Energy Future Together. So my short presentation is to share with you Sembcorp's journey towards a low carbon energy business, where we are currently, and a glimpse of where we are heading in the future. Next slide, please. So we started about 25 years ago in our utility business in Jurong Island. Next slide, please. As I said, it all started 25 years ago when we embarked on an innovative and visionary concept of providing utilities and other services to the petchem customers on Jurong Island on a centralized basis, which allows steam to be generated with high efficiency and therefore reducing the carbon density. This then enabled the first world-scale cogeneration power plant in Singapore with the commercial import of pipeline natural gas from West Natuna, Indonesia, which became on stream in 2001. So in 2007, we invested in a 35 megawatts biomass power plant in Teesside, UK, which we had bought in 2003, using sustainably sourced wood with CFB technology. And then moving further, in 2012, we entered the wind power generation business in China and also invested in wood chip boilers to raise steam in Jurong Island, therefore allowing us to back off a little bit on the natural gas that we imported from Indonesia. In 2014, we decommissioned our UK coal boilers and also invested in a second cogeneration plant in the Banyan district of Jurong Island. And in 2015, we entered the Indian renewables energy market, which had about 400 megawatts of operating wind through the platform that we bought. And today, we have grown that to over 1,700 megawatts of wind and solar in India, making us one of the major players in the renewables energy business in India. The following year, in 2016, we started our solar business in Singapore and is today a major player in Singapore with approximately 240 megawatts of operating and under development assets. As Mr. Ngiam mentioned earlier, Singapore is already achieved its target of 350 megawatts solar by 2020. So we are a contributor towards that. In 2016 and 2018, we invested in energy from waste plants in the UK and Jurong Island respectively. Basically, I think taking about 480,000 tons per year of municipal solid waste from Merseyside and railing it across to Teesside to generate steam and power, because we also have a very steam sink in Teesside supplying to the petchem industries. In Jurong Island, our capacity is about 1,000 tons per day of commercial and industrial waste that we collect through our waste management business to allow us to produce steam, and therefore I think backing down a little bit on the gas generation. Earlier this year, we have been selected by PUB Singapore to develop a 60 megawatt peak floating solar farm on Tenge water reservoir. So you can see, the quite many milestones. I just highlighted a few, which shows that we have been constantly looking to reduce our carbon footprint over time. Next slide, please. So we focus on 4 strategies in creating a low carbon future. Number 1, to lower our carbon footprint. Number 2, leveraging on technologies to improve our renewables asset performance. Number 3, creating novel sustainable business solutions for our customers. And number 4, collaboration with partners and stakeholders. I'll elaborate on each of these in the following slides. Next slide, please. We set a carbon target of 0.42 tons carbon dioxide equivalent per megawatt hour, which is a 22% reduction from our 2017 baseline, and a further 4% reduction to 0.4 tons CO2 equivalent per megawatt hour by 2030. The main driver for this reduction will be a rapid scaling up of our renewables capacity from just over 2,000 megawatts in 2017 to more than doubling it to 4,000 megawatts, at least 4,000 megawatts by 2022. Next slide, please. So this is on technology, leveraging technology. We have 2 performance centers. One is in Gurgaon, where we have a wind performance monitoring center, and another one in Singapore, where we have a performance monitoring center for solar. And basically, these are driven and enabled through a combination of digitization and data analytics and smart algorithms to enhance our asset performance, both for the wind and the solar assets. Next slide, please. So an example of a sustainable and novel solution is the centralized utilities that we operate in Jurong Island. As I mentioned earlier, I think we started this in 1995. What started out as a 40 million Singapore dollar centralized steam and water services facility on Sakra has morphed into a multi-billion-dollar asset base comprising of facilities in Sakra, Seraya, and the Banyan district of Jurong Island, all interconnected by a comprehensive pipe service corridor network throughout Jurong Island. So the scale effect of through centralization has allowed us to generate steam and power very efficiently through cogeneration plants. It also allows us to enable recycling of waste heat and water. For example, I think we send steam to our customers return the condensate back to us, and we will reuse the heat and credit the heat to them. We also take their waste organics, which is otherwise a waste, and then put it through our boilers, specially designed boilers, to raise steam and supply back to them, therefore enabling a circularity of utilities. As a result, what we have been able to achieve is to avoid 415,000 tons of CO2 equivalent annually. We have also been able to recycle approximately 30,000 tons per day of water for industrial use, and generate steam from approximately 300,000 tons of solid waste per year, as I mentioned earlier, from our energy from waste plants and also our wood chip boilers. So in summary, I think the centralized utilities concept in Jurong Island has contributed the following sustainability benefits. One, we are able to lower the carbon footprint for utility supplies to our customers. Number two, I think because of the scale effect, we have been able to recycle, do recycling economically because of the scale, as I mentioned, and also the multi-utilities nature. The third major benefit, of course, if you look at Jurong Island, it is a very highly dense capital investment, and therefore efficiency in the use of land. Jurong Island is only about 35 square kilometer, but today I think it has, almost 60-70 billion Singapore dollars of investments over time. Next slide, please. So besides the long-term partnership with the customers in Jurong Island, which I elaborated in the previous slide, we are also partnering customers in mainland Singapore for the supply of solar power generated on rooftops. Through massive leaps in technology improvements, renewables have reached grid parity, and its adoption will accelerate. Combined with government's future focus on self-sufficiency and energy security as a result of the current COVID-19 pandemic, we believe renewables will grow even stronger in the future. Mr. Ngiam, I think, talked about reaching, the target 2020 350 megawatts. But I understand the EMA has also set a very high target of 2 gigawatts of renewables going into the future. And obviously, I think technology will be one of the key enablers to achieve that target. Next slide, please. So this slide, I think, shows you that we have a very strong foundation for a sustainable future. We have developed over this suite of capabilities over the last 25 years, and we'll continue to develop new capabilities in the future. And we hope that will enable us to provide even more creative solutions to our partners to meet their sustainability development goals. So I've come to the end of my presentation today, and thank you very much for your attention.
Thank you very much, Mr. Tan. We are now about to start the Q&A session, but before we begin, if you would like to ask a question, please click the Q&A button, and please let us know if you'd like to direct a question to a particular speaker and also which organization you're asking the question from. I would now like to hand over to our moderator, Ms. Swee Chen, President of Global Compact Network Singapore. Ms. Go, please.
Thank you very much, Desiree, and thank you to Neil and Cheng Guan for your presentation earlier on. I'm quite sure it gives the participants quite a lot of food for thought. But let me just start the question first with a general question that is likely in everybody's mind. And this is the impact of the containment, Neil, as you call it, the pandemic that we are all going through right now. It's a confluence of events that has been extraordinary. Even with this particular session, everyone dialing in through Zoom virtually. This is probably one of the few times that we have to really dig into innovation to continue to engage and interact on important topics. So the question I wanted to ask is this: the pressures, and Neil, you mentioned it, supply will be cut by 12 million barrels, demand will go down by $9 million barrels, and for a region like Southeast Asia, we heard Mr. Ngiam said that oil continues to be a major primary source of energy. But as we look forward and we look towards creating a low carbon future, the pressures right now, as we see it, the pressures on public health and the economy will have definitely a knock-on impact on energy. It is a perfect storm, and it could dramatically change the future as we know it. Or it could just come and go and we all revert to our life as it was in the past. And I have several questions here, also taking some of the questions that was submitted earlier. Neil, you've talked a bit about demand and the impact of COVID in demand. If we take it closer to this region, what would it look like? And also, with all the challenges that we're seeing right now, would this call that has stepped up over the past few years on a low carbon future, will it take a back seat? Will we say, there are other more urgent matters for us to look at, and creating a lower carbon future, this would need to take the back seat for now. And also in here, I know it's a questions of questions, right? How can governments, corporations, and consumers alike, how can they emerge from this period more strengthened, more resolute in creating a lower carbon future? So anyone could go first. Neil, if we go by the order of the presentation, would you like to go first?
Yes, thank you very much. Those are absolutely enormous questions. As well as in my own work, trying to look at the impact in 2020 of the collapse in oil demand and the crisis in the oil markets, my colleagues at the IEA are trying to understand what this means for the medium and longer term. And it's very tempting and perhaps quite easy to say that in many respects, things will never be the same again. In some respects, there will be major changes. But one of the main points that the IEA is emphasizing and has done since the beginning of the COVID-19 crisis is that although we are living through a terrible time, which has impacted on the lives of millions of people around the world, whether it be their health or indeed their wealth in terms of unemployment, that there is also an opportunity here, because governments around the world are attempting to find their way out of the economic slump that they're going through, and the governments will have plans for investments in infrastructure and in other parts of the economy. And one of the ways in which the economy can, or the economic recovery can be driven, is by investments in clean energy technology. Number one, because it will provide employment and help regenerate the economy. And number two, it will maintain the momentum that we would like to see in the move towards a lower carbon energy and a lower carbon wider economy. So there is, in today's very dark times, there is also an opportunity that perhaps can be grasped with policymakers in governments being the main driving force behind this, working with the private sector, of course, and with the financial sector to help drive an economic recovery that emphasizes clean energy. So that's the first point I'd like to make, certainly on behalf of the work that the IEA is doing.
Yeah, so there are silver linings that can be sought from this particular crisis. Cheng Guan, what's your views?
Yeah, I fully agree with what Neil has just said. And I think, unfortunately, of course, humans have short memories. And I think once normalcy returns, and normalcy will only return if we have a vaccine found. And I'm sure, I think within the next 12 to 18 months, a vaccine will be found. We'll then go back to our old ways. However, I believe that I think the body of thinking that this pandemic is somewhat related to unsustainable development is growing. And therefore, I believe that sustainable development will accelerate going into the future. We know that, as what Neil said, technologies will be the key to drive sustainable development through lowering of costs. Subsidies are not sustainable. We know that. An example of that is, look at solar and wind. 10 years ago, I think things were a lot more expensive. And during the last global financial crisis, China and a few other countries, I think, allocated significant amount of the stimulus. In China, I think 40% of their $586 billion US stimulus was dedicated to sustainable energy development. And we see the result of that, because if there's more R&D, there's more investment in this sector, and we see the benefits today. Solar in particular, and also wind, has already reached grid parity. So I think the momentum will further gain, and for customers, I think all of us wants to contribute towards a greener and more sustainable future. But obviously, it's a lot easier if it doesn't hit our pocket so hard. So I think with the cost of renewables coming down, I think just things will just accelerate. Now, I think if you look from today to the future, I think the potential of the renewables energy sector is even greater as when viewed during the global financial crisis. So I'm sure there'll be a lot more actors putting more money into it because the payoff will be very, very substantial, and that will drive new waves of innovation that will create better technologies and faster adoption. So I fully believe that as more capital is invested in R&D for clean technologies, things will accelerate it. And I think government has an opportunity to put significant amount of money into this area to create new employment, employment for the future, and to make it more sustainable.
Thank you very much. So we continue to be optimistic that the challenges today, plus the sustainable climate challenges, those will compel us, companies, individuals, to continue to drive for innovation in a lower carbon future. And actually, we've seen a report released by IEA that has shown that while other primary sources have seen a decline, renewable energy has actually seen an increase over the past quarter. There is a question that has come in, and let me read the question. It's still related to the pandemic. I guess it's top of people's mind. And Mr. Ngiam had said that 60% of energy demand is in transport, and Neil, you've shown how demand will look like in the outgoing months. So this question is, we have seen how the pandemic has impacted transport fuels and specifically jet fuels. And there are 3 types of transport fuels mentioned: land, air, sea. And it asks, can you rank them in terms of which has the greatest carbon footprint from largest to smallest? And then there is another question on oil. There are projections on how oil demand will rebound after the containment. Will it rebound back to the same levels, or will it exceed? And then there is a third question. So these are all composite questions. How will the pandemic affect investments into renewables? I think we've had some of those responses. Perhaps we focus on the first 2 questions.
Wow, there's an awful lot there.
Yeah.
As far as the ranking by CO2 emissions, land, sea, and air, off the top of my head, I can't remember the exact numbers in terms of emissions. Obviously, the collapse of aviation has led to a dramatic fall in emissions, which has been visible. But obviously, road transport, whether it be trucking or passenger vehicles, is overwhelmingly the overwhelming share of total transport demand. And the fact that here in France, for example, we saw something like a 75% collapse in gasoline demand since the confinement started, and something like 65% collapse in diesel demand, 80% collapse in aviation demand. The land sources are the major sources of emissions. The point about the recovery, the pace of recovery, this is a very, very important question, and it's been asked in 1 or 2 of the questions that have been typed in about the pace, and indeed how we can be optimistic that there is a recovery in the second half of the year. And what I need to say here is that, of course, this is an unprecedented situation. There is nothing else in our experience that we can use to compare where we are in 2020 with. And so to some extent, we are in uncharted territory. Our view is this: confinement measures are starting to be lifted in various parts of the world. And there is an enormous pent-up demand out there for people to be able to move around within the restrictions that will remain in their various countries. There is huge pressure from businesses, not just big businesses, but small and medium-sized enterprises to reopen in the near future. So there is a lot of pent-up demand, if you like, for economies to start to reopen and start to function as normally as possible. And we think that on the basis that there isn't a second wave of the virus in the second half of the year, and that is, of course, a big assumption, on the assumption there isn't a second wave, we think the demand, the pent-up demand will reemerge and there will be a much stronger performance in the second half. But we admit, and we must be open, that if there is a second wave, there is a resurgence, the lockdowns are eased perhaps too quickly, then there is a risk that we go back into containment. And of course, we see in the second half of the year something similar to that we've seen in the first half. So we're in uncharted territory, but we hope as citizens that for all of us around the world, the situation will improve in the second half. Let's see.
Yeah, we'll want to see that improvement.
Just on investment, sorry, the final point, just very quickly on investment. I didn't want to overlook that. The IEA is working on its World Energy Investment Outlook right now. And we're doing our peer reviewing and we're going to release it in the near future. You may have seen in the press and in various other announcements that certainly in the oil and gas sector, which I know best, there are already signs that investment in the upstream oil and gas sector is going to fall back very considerably in 2020. We don't have a final number yet, but it's going to be very, very considerable. However, on the other side of the fence, so to speak, as was suggested earlier, the renewables sector looks to be faring rather better. And of course, in power generation, there is an enormous head of steam, if you like, behind renewables. And in my own home country, in the United Kingdom, we've just gone through, I think, 18 consecutive days where no coal was used in the generation of electricity, which is incredible. And yeah. I think renewables now are taking somewhere between 30 and 40% of the share of power generation. So there is an enormous momentum behind renewables, and the IEA believes and indeed advocates as a policy recommendation that investments in renewables should be maintained and indeed increased if possible.
Yeah, and Cheng Guan, I was actually going to ask you the investment question because there are, of course, the investments in upstream. We've seen these cycles. The investment in upstream exploration will go down dramatically. And also there is this increasing concerns on stranded assets, stranded value as well. When you look at the big supply overhang that we will continue to see and will be further aggravated should the containment or the pandemic gets extended. And the outlook must be positive, must be optimistic for companies like Sembcorp. Can you say more about how companies like Sembcorp will be looking at its investment? Will it be more aggressive? What actions would it take in light of all the things that's going on around us?
Yeah, thanks, Swee Chen. I think if you look at the destruction of electricity demand, I think it's a massive destruction. I think that means that it will take a while, even with recovery coming up, it will take a while before new capacity is going to be required. And I'm talking about electricity generation capacity in general, including from gas and other fossil sources. But I think, as you pointed out earlier, I think the sector that's still growing during the pandemic is the renewable side. And as I said earlier, it is pretty much due to the fact that renewables has already reached grid parity. So I think in the short term, of course, all companies will be looking at investments very carefully to make sure that we invest in the right sectors. And I think if I just look at the renewables sector, I think that is going to be much more sustainable going into the future. I believe that countries will, despite the fact that there may be overcapacity, but having to look more into energy security. And if you have domestic renewables resources, I'm sure countries will start to focus about developing those resources domestically, because then you don't have long supply chains, to worry about, when the similar crisis happens. So I think in countries whereby, you have massive renewable resources, whether it's in solar, irradiation, or wind, right? I think you probably see, accelerated growth over there. So for us, I think when I presented earlier in my presentation that we're going to be doubling our renewables generation capacity from 2,000 megawatts in 2017 to 4,000 to more than 4,000 megawatts in 2022. I think that is still intact. So I think we're confident that we'll continue to grow this particular sector.
Yeah, and Cheng Guan, while you're on the line, there was a question about your RAC that you've just announced recently, the RAC aggregator platform. How does it work? How does it fit in Sembcorp's 4 strategies that you've presented earlier?
Yeah, so I think if you look at Singapore, there's a lot of companies, I think, who are looking for sustainable energy. But we know that Singapore, I think, has got limited land area, and our solar irradiation is, despite that we have a lot of sun, but there's a lot of cloud cover, and therefore, I think the yield is only about 11-12%. But I think there is a big demand for green energy or green certificates. So we have renewable energy generation in India. We have renewable energy in China, and we are developing, more renewable energy investments in Southeast Asia. And we thought that it would be useful to have a platform which is enabled by blockchain to bring, RECs into Singapore for us to supply to our companies to allow them to achieve their sustainable development goals. So I think that's the whole purpose of that. So it's just started. I think we'll continue to see how we can improve on it and make it useful for our customers and partners.
Would you be able to say what are your long-term ambition for this platform?
I think we want it to be, cross boundary, obviously. And, obviously, I think if you have a REC that is generated, in a third country, not outside of Singapore, but if, through blockchain, you can have a very high degree of governance to make sure that the REC generated is really from a renewable source and trusted renewable source. I think that would be useful. But as I said, this is something which is just started off, and we've just launched it. So we'll see how it helps.
Yeah, and I wish you all the best. It's an important endeavor. Neil, there is a question for you, and this is one. It's again related to the pandemic, and it says so we've seen from the report that IEA has reduced that renewables has seen some growth. And the question here is, it says, trying to understand if the current pandemic will result in faster growth of renewables demand, and the thought about implication for collaboration amongst the ASEAN countries. And actually, I think across not just ASEAN, I think it's also an important question beyond the ASEAN countries. Will cooperation increase, or will national concerns drive countries apart in coordinated policies?
Well, of course, we hope that international cooperation will be enhanced, because as you rightly suggest, this is a much bigger picture than reflected in the interests of only one country. And an example of how international cooperation can be maintained even in the current crisis, where perhaps governments might be looking purely to their domestic situations, is in the role of the G20. And recently the IEA was instrumental in bringing together the G20 countries to look at the short-term issues with respect to the stability of oil markets. And the IEA does have considerable convening power to bring governments together to try and tackle some of these bigger issues. And it comes back to the point that I made earlier, that there is an enormous opportunity as governments try to regenerate their economy, reboot their economy, get people back to work, to invest in the ongoing development of clean energy technologies, to have the double whammy of restarting economic growth while at the same time maintaining momentum in the clean energy transition. It's not going to be easy. And of course, in so many countries around the world, many people have lost their jobs. And it's obviously the primary responsibility of governments to maintain the security of their citizens, whether that be political, military, but of course social and economic. And governments will quite naturally be looking at ways in which they can get the maximum number of people back to work in the shortest period of time. But while entirely understanding that, dynamic, what the institutions like the IEA are trying to do is maintain the focus of governments on how the clean energy transition can help. And one final point on this, which relates to another question which I saw in the written chat at the bottom of the screen, related to how it could be difficult because of social distancing and the ability of having people working on sites while maintaining distances. And that's, of course, something we can't underestimate either, but that's another one of the factors that's going to have to be taken into account. But certainly at the IEA, we'll be playing our part in doing everything we can to help push along these policies and help grow the economy again in the cleanest and most sustainable way possible.
Yeah, and energy companies has for years have put safety in core and center of all they do. And so this one about social distancing and keeping workers safe, I'm quite sure it's very much in their daily routine as they ensure that production continues during this period. Just one question here. There's a question on hydrogen, and hydrogen has recently, the past few years, gotten quite a lot of airplay as a very credible alternative source of energy. And the question here is, will the slump in oil pricing decelerate the move to cleaner fuels, such as hydrogen, given the high costs associated with developing a stable and affordable supply of hydrogen? And of course, you know, we've always heard that there's gray hydrogen, there's blue hydrogen, there's green hydrogen. And perhaps, I don't know if Cheng Guan or Neil, you could respond to this particular question.
So maybe I'll go first. And I think with the reduction in terms of cost of electrolysis, I think we see that hydrogen become more competitive. But I think it's true also at this point in time that the cost premium for green hydrogen is still high. But who knows? I think with the rapid reduction in terms of cost of solar and wind power generation, and if you couple that with reduction in cost of electrolysis, and I think if people see a big future, more R&D money will put into it, and I think that will probably result in something that is likely to be viable. But I think if we take a look at the mid to longer term, I think the current oil price probably will not be sustainable. But if you look at a long-term, sort of oil price projection, I'm sure Neil probably will have a better view of that. But if you are in the region of $60 per barrel of crude, I think many of these technologies will become fairly viable soon.
Yes, so you've answered that extremely well. And I'll just pick up on the last point you made about oil prices returning. Obviously, at the moment, such is the volatility that it's difficult to know where the oil price is going to be at the end of this week, let alone when we get back to $60. But your point, though, is very important, is that on the assumption that we do see an economic recovery, there isn't a second wave of the pandemic, and in 2021 we start to see growth again, there will come a point in the next few years, because investment in the upstream oil and gas sector will definitely be significantly lower this year and probably next as well. there may well come a time where the gap between supply and demand starts to narrow and the price pressures start to look up again. And at that point, if we are looking at, say, $60 a barrel, we're not forecasting that, but if you look at the futures curve 3-5 years out from now, although there's not much liquidity in it, but as a rough guide, it tends to look at about $60 a barrel 3-4 years from now. At that point, as you just said, then there is the scope for competitiveness to improve from where it looks like it is now, and the investment will come back. But this clearly is more of a medium-term issue than it is a short-term one, and we need to get through the current crisis first.
Thank you. There are a few more questions, but we've run out of time. And what I would like to do is to leave the audience with a quote and then a question that I hope both Neil and Cheng Guan could help answer. So this is a recent quote from Dr. Fateh Birol, the IEA Executive Director, and he said, "This is a historic shock to the entire energy world. Amid today's unparalleled health and economic crisis, the plunge in demand for nearly all major fuels is staggering, especially for coal, oil, and gas. And only renewables are holding up during the previously unheard of slump in electricity use. It is still too early to determine the longer-term impacts, but the energy industry that emerges from this crisis will be significantly different from the one that came before." So let's conclude the panel with your views on what needs to be different.
Go ahead.
Cheng Guan.
Yeah, so I think for me, as I mentioned earlier, I think investments into R&D for the clean energy sector can have massive payoffs, as we have seen, in the last GFC, where governments put a lot of investments, allocate a lot of investment into R&D. And I think going forward, more technology breakthroughs will enable more, sustainable solutions to be created. If I look at the battery energy storage systems, if I look at microgrids, if I look at hydrogen, there's a lot of new investments in the new areas. And I think that is very positive. And coming on the back of government's focus to ensure energy security for their economies, I think that will only accelerate clean energy development. So to me, I think renewables will become more and more mainstream going into the future.
Yeah, some very good points there. And indeed, what the IEA has just recently said in its Global Energy Review is that energy demand as a whole is going to fall by something like 6% in 2020, which is, we calculate, roughly 7 times greater than the impact that we saw following the global financial crisis just over 10 years ago. And this decline is unprecedented. And we think it's roughly the equivalent. We will lose in 2020 roughly the equivalent of the entire energy demand of India, which is today's, after the US and China, is the world's 3rd largest energy consumer. So we're seeing major changes. But as we've said now, I think on maybe 2 or 3 occasions during the Q&A here, renewables are likely to maintain and enhance their position in the power generation sector, taking something like a 40% share, partly because in many parts of the world they get priority access to the grids, and that policy momentum behind renewables will remain in place. So we are likely to see a strengthening of the position of renewables. Now, as far as the traditional oil and gas sector is concerned, particularly the oil industry, for the foreseeable future, certainly during this next decade or so, oil is likely to, or rather transport, the transport sectors, land, sea and air, are likely to take well over 60% of global oil demand. And although there is a move towards electrification, as we're starting to see around us, gasoline and diesel will still remain overwhelmingly the fuel of choice in the transport sector. And gradually, as the economies reopen and people get back to more normal life, we should see demand for liquid transport fuels start to pick up again. The pace of that pickup depends entirely on how the lockdown measures are eased, whether there's a second wave of the virus, and indeed whether, as a result of the lifestyle that we're currently living, there is some kind of fundamental change in mobility patterns. I mean, for example, will we see more events such as this be carried out virtually in the future? Will more people work from home more regularly? These are big issues that we're still trying to understand, and it's still rather early days in the coronavirus crisis to fully understand what these big pictures mean. But there are changes, clearly changes afoot, major changes, and we're living through. We are right now in the middle of one of the most historic periods, not just in energy markets, but of course in all of our lives that we have seen.
Thank you. Thank you very much. We've gone way over time, but let me just do some quick summary. Clearly, the pandemic is top of everybody's mind, and it's offering some opportunities. We need to look at the silver lining that presents to us. The path towards the energy transition towards a low carbon energy future, it is more resolute now than ever. And collaboration is required, and there is an opportunity to look at rebuilding the economy and the society and make it more resilient to crisis. Clearly, transformation required, especially in the conventional oil and gas company, but companies like Sembcorp, who has already embarked on renewables, continue to step up on the work that is done there. And with that, let me hand over to Desiree.
Thank you very much, Ms. Goh, Mr. Atkinson, and Mr. Tan. Thank you very much for that insightful discussion. Ladies and gentlemen, on behalf of the Energy Market Authority of Singapore, I would like to thank you for joining us today for the launch of the Singapore International Energy Week 2020. We look forward to having you join us at SIEW later this year from the 26th till 30th of October, when we discuss this year's theme, creating our low carbon energy future together. Thank you very much and have a great day ahead.